Welcome back to the Deep Dive. We're here again, taking a big pile of source material, digging through it, and basically giving you the essential knowledge without all the noise.
Yeah, cutting straight to what matters.
Exactly. And today, we are immersing ourselves in, well, an ecosystem that's really trying to be a lot of things at once. It's part meme coin, part NFT project with, like, serious utility ambitions.
And part global merchandise brand. It's quite the mix.
It is. We are diving deep into the world of Squeak.
It's definitely ambitious, particularly building this all on Cardano. They call themselves a Web3 Marmot adventure, which sounds fun, but it's a serious attempt to blend meme coin energy with, sustainable value.
Right, like trying to get the best of both worlds, maybe.
Yeah.
The community buzz and actual long-term stuff.
That seems to be the goal. And it all centers around building this actual physical, real-world brand.
Okay, so our mission today is pretty clear then. We need to unpack everything. We've got website info, token details, plus this really in-depth interview with the founder, Dave. And we need to give you, the listener, the full picture. We're focusing hard on that key question. What's actually designed to create value here for people holding the token or the NFTs?
Yeah.
And maybe more importantly, why should someone actually, join this village?
And the sources are quite detailed, thankfully. They talk infrastructure, this unique, guaranteed NFT liquidity thing they have.
Yeah, we need to get into that.
Definitely. And their investment strategy, which is kind of the engine behind the whole growth plan, it's not just about hoping the token price goes up.
It sounds like a complex financial loop designed to fund, well, an IP empire, almost.
Yeah, that's a good way to put it.
Okay, let's start unpacking that core identity. And we really have to start with the mascot, because it seems like a very deliberate choice.
It does.
And let's get this straight first. It's not a hamster.
No, definitely not a hamster. The founder makes a point of saying this repeatedly. Squeak is a marmot.
Right, from the Alps.
Yeah, exactly. Fluffy, apparently funny, trustworthy. That's the vibe they're going for. And Dave, the founder, he specifically said the marmot was perfect because it's, and I quote, not branded yet in crypto.
Ah, okay, so they wanted something fresh, not another dog or cat coin.
Pretty much. Originality. And just for scale, because people apparently mix them up, he mentioned a marmot is about 10 times bigger than, like, a hamster.
Good to know.
Yeah.
Avoid tiny marmot confusion.
Right. So it's about the look, but also the strategic positioning. An unbranded, trustworthy face for a new Web3 IP.
And that idea of trust, maybe, and long-term thinking, it connects to the founder's background, doesn't it? Dave, is that your typical crypto founder?
No, he's a process engineer, studied mechanical engineering.
But he's not new to crypto, not at all.
Oh, definitely not. He actually got into Bitcoin way back in 2014, which is ancient history in crypto terms.
Wow. Did he?
Yeah, he mentioned he sold those holdings back then, made enough to travel for 6 months. So, a classic early crypto story in a way.
He saw the potential early, took some profit. That probably shapes how he's building Squeak now, thinking about value and maybe risk.
Seems likely. That experience probably informs this whole emphasis on long-term value, sustainability, maybe even mitigating some of the crazy crypto risks.
Yet he came back, focusing on Cardano around 2018, 2019. So his roots in this specific ecosystem are pretty deep now.
Yeah, that's where the project is built, though he seems aware of what's happening on other chains too.
Okay, what about the team? It's not just him, right?
No, it's a small core team. He mentioned a co-founder who's based in Denmark, acting as the main lead on some things.
Right.
And then they have moderators, community support. The sources suggest maybe around 7 people total running the day-to-day.
7 people for this. Multi-headed beast. That's lean.
It is, especially given the complexity they're aiming for.
Which brings us neatly to the 3 pillars. This is key. It's not just a token. It's not just NFTs. Squeak is deliberately designed to be 3 things: a meme coin, an NFT collection, and this Kawaii brand.
Right. And that Kawaii brand part, that feels like the really ambitious long-term play.
Explain that a bit more. What does Kawaii brand actually mean here?
Well, Dave explained it pretty simply as a cuteness brand. He pointed to examples like Hello Kitty or Poyo the cat, big IPs, especially in the Asian market.
Okay, so think that level of, like, character-based cuteness.
Exactly. And the strategic thinking is that he believes this specific type of high cuteness brand is basically missing on Cardano. There's a gap in the market as he sees it.
So use Web3 tools, the coin, the NFTs, to build the foundation and the funding for what becomes essentially a traditional IP brand focused on cuteness.
That seems to be the plan. Filling that niche on Cardano, then maybe going broader.
And you can see this vision reflected in their branding moves, right? Like getting the domain name squeak.world.
Yeah, that's a significant signal. They started with squeakcoin.com, which is very token-focused.
Right, standard meme coin stuff.
But moving to squeak.world, that really signals their thinking ecosystem, a whole world of cuteness, like you said. It connects the Web3 engine directly to that bigger long-term Web2 brand ambition. It's about more than just the token now. #22. The Squeak token and ecosystem infrastructure.
Okay, let's get into the engine room then, the mechanics. At the center of it all is the Squeak token. It's the village currency, right?
That's how they frame it. And its utility seems to be, well, threefold, really. Each part supports the whole system.
So what can you do with it?
You can just buy it and hold it, obviously, and there are rewards for that we'll get into. But crucially, it's the link to the NFTs.
Ah, okay, through this liquid NFT swapper thing.
Exactly. This is maybe one of their most interesting mechanisms.
So how does it work? What does it actually do for holders?
It's basically like a guaranteed buyback machine, or a faucet, as they put it. It lets anyone swap 200,000 Squeak tokens for one of their main NFTs, the Squeaky Squeakers.
Okay, so you can always buy an NFT with a fixed amount of tokens.
Yes, and this is the important part. You can swap that NFT back to the system and get your $200,000 Squeak back anytime.
Oh, wow. Okay, so that guarantees the NFT is never worthless or stuck.
Precisely. It addresses that huge NFT problem, illiquidity. Your Squeak NFT always has a buyer of the protocol itself at a known price in Squeak.
And that price is fixed at 200,000 Squeaks. So it anchors the NFT value to the token value.
Exactly. It establishes a hard floor price for the NFTs in terms of Squeak. If the market price on, say, a secondary marketplace ever dropped below the equivalent of 200K Squeak.
People just buy it cheap there and immediately sell it back to the swapper for profit.
Right. Instant arbitrage opportunity. Which should, in theory, keep the NFT price from falling below that 200K Squeak peg. It builds in stability.
That's actually quite clever. It makes the NFTs feel much less risky than typical PFPs where the floor can just vanish overnight.
It's a strong selling point. But of course, maintaining that swap or funding the Web2 dream, that all needs money. Which brings us to the 3% trading fee.
Yeah, the founder called it a heavy fee. 3% on trades is noticeable. Why would people accept that? Doesn't that kill trading volume?
That's the gamble, right. A high fee can deter flippers and reduce short-term speculative volume. But Squeak seems okay with that trade-off because of how they use the fee. It's structured very specifically to feed back into the ecosystem.
Okay, break it down for us. Where does that 3% go?
It's split 3 ways, plus a little extra. So 1% goes directly to grow the liquidity pool, the LP, that helps stabilize the token price and allows for bigger trades without massive price swings.
Standard practice, mostly.
Okay. Then another 1% is used for buying back Squeak tokens from the open market.
Ah, okay. So directly reducing supply, pushing up the price, and rewarding holders somehow.
Yeah, that buyback directly benefits all holders by increasing scarcity and potentially the price. It's a deflationary pressure funded by activity.
Got it. And the third 1%?
That 1% is specifically earmarked only for developing the Web2 brand, funding the plushies, the books, the marketing for the physical side of Squeak.
So the trading activity of the community literally pays for the creation of the real-world brand.
Exactly. It creates this direct link. More trading volume means more funding for the Web2 expansion, which, if successful, should bring more value back to the whole ecosystem. It's a reinforcing loop.
It makes the fee feel less like a tax and more like an investment in the project's future.
That's the idea. And there's one more piece to that fee.
Oh.
An extra 0.5% is taken just from Squeak Buy transactions.
Okay.
And that 0.5% goes directly to the holders of those special Golden Squeak tickets.
Ah, the tickets. We'll get to those. But that's like a direct revenue share for specific early supporters or high-tier holders.
Exactly. Volume-based passive income just for holding those tickets. So the heavy fee has a clear purpose: utility, stability, and funding the dream. And it answers that question. How can the community help the price?
Generate trading volume. Because that volume directly triggers the buybacks and the brand funding.
Precise.
Okay, moving from the currency to the main assets, the Squeaky Squeakers NFTs. There are 4,444 of these marmots, right? And they're called the gold standard of the ecosystem.
Yeah, that's the term they use. They're positioned as the premium asset. They are defined as a PFP collection, profile picture collection.
So designed for people to use on Twitter, Discord, etc.
That's the intention, yeah. A visual community identity. But the founder was clear, using it as your profile pic isn't mandatory. The real value is the utility.
Which is?
Holding them unlocks special perks, but the big one is access to much higher, exponentially higher drip rewards compared to just holding the Squeak token.
Exponentially. Okay, that's a key word.
Very key. And their liquidity, as we just discussed with the swapper.
Right, they're always worth at least 200,000 of squeakers because you can swap them back.
Exactly. That guaranteed floor makes them a pretty unique type of NFT asset, especially on Cardano, where liquidity can sometimes be a challenge.
And the mint?
Yeah.
How did that work? Was it expensive?
The plan was to target an average price around 40 USD. The idea seemed to be accessibility, getting them into more hands to grow the community.
Makes sense. And the money raised from the mint, where did that go?
Crucially, apart from covering the artist fees and basic setup costs, the mint revenue was designated to go straight into the investment fund.
Ah, the fund again. So the mint directly capitalized the engine that's supposed to drive future value.
Yes, it's all interconnected.
Okay, let's quickly touch on the website itself. The structure sort of shows the different parts working together, doesn't it? The core operational hubs.
Yeah, the site isn't just a pretty front page. It's meant to be where everything happens. The sources list 6 main functions you'd see: mint, swap, squeak, presumably info staking, NFT marketplace, web shop, and our ecosystem. Likely an overview.
And that web shop, it's not just a coming soon thing.
No, that's what's interesting. It was already active, according to the sources. They launched with the limited edition legacy Squeak plushie.
A physical plushie. All right.
Yep, only 100 of them, and you had to sign up. But it demonstrates that the Web2 brand isn't just talk, that 1% fee for Web2 development. They were putting it to work immediately, making actual physical products.
Okay, that's a strong proof of concept right from the start. #tag3 value creation and reward mechanics. But this feels like the core of it, the why should I care section. The whole system seems built on these continuous price appreciation mechanics. The trading fee helps, sure, but the main driver seems to be this investment fund and buybacks strategy.
Absolutely. This fund is designed to be the project's economic engine, or maybe even its safety net. Mint money goes in, ongoing profits from various activities go in.
And then, what does the fund do with that money?
It invests it across a pretty diverse range of things, both crypto and, well, non-crypto assets, effectively. And the profits from those investments are then used for 2 specific things: buying Squeak tokens off the market.
The buybacks we mentioned to support the price.
Exactly. And secondly, to buy other Cardano native tokens, which are then used for the drip rewards system.
Okay, wait. So the fund generates external revenue and uses that profit to pump value back into the Squeak ecosystem and token.
That's the design. It's meant to stabilize and grow the internal economy using profits earned outside of just Squeak token speculation.
That's quite sophisticated for a project that also calls itself a meme coin.
Yeah.
Let's break down those investments. Mining rigs, nodes, Forex, liquidity farming.
Right.
Why such a mix?
It looks like risk diversification and playing different timelines. The crypto mining rigs and nodes seem like the slow and steady part.
Okay. Generating crypto over time.
Right. They specifically mention investing in nodes for what are called deepen projects, decentralized physical infrastructure networks, like any Vikings and
return of them. But okay. So these nodes generate tokens steadily.
That's the idea. Generate tokens consistently through bull and bear markets, accumulate them, and then realize the profits, potentially in the next bull cycle, to feed the fund. It's the long-term stable base.
Got it. Then you have the more active stuff. Forex trading and liquidity farming. Forex seems unusual for a crypto project fund.
It is, but the approach sounds very calculated. They're using a Cardano project called Arbiter to do it. And crucially, it's not about making long-term bets on currencies.
So what are they doing?
They described it as scraping volume based on clear technical signals. They're relying on Arbiter's track record. The sources cited 12-30% gains over 1.5 years in crypto via Arbiter, and apparently Arbiter has a 5-year Web2 track record showing over 200% gains.
Okay, so they're outsourcing the Forex trading to a specialist platform with a history.
Okay.
But trading Forex involves fiat currency risk.
But here's the key detail for risk management. The capital used for this Forex trading. It's held in USD.
Oh. Not an ADA or sweep?
Nope. Held in US dollars. This is a deliberate hedge. It insulates that part of the fund from crypto market volatility. If crypto crashes, the Forex trading capital, denominated in USD, is unaffected. It's a way to have assets working outside the crypto sphere to generate returns, especially to prepare for bear markets.
That is genuinely professional treasury management, using crypto gains to diversify away from crypto risk. Impressive.
It shows serious planning. And the last piece is liquidity farming.
Right. Providing liquidity to decentralized exchanges.
Yeah, and this is apparently an area the founder knows well. They're targeting efficient farming pairs, like stablecoins, USDC, paired with ADA. The goal here sounds pretty aggressive, aiming for 40% to 60% APR annually.
Wow, that's high. But focusing on stablecoin pairs reduces the impermanent loss risk compared to farming volatile pairs.
Exactly. It's high yield, but managed risk. And this provides a more constant stream of income for the fund, which can then be quickly used for those Squeak buybacks or buying the Cardano native tokens for rewards.
So putting it all together, the investment fund uses mining in nodes for long-term stability, hedged Forex trading in USD for non-crypto correlated returns, and high-yield stable farming for consistent income. And all these profits flow back to support Squeak and the reward system.
That's the machine they've designed. It's built to continuously feed value back into the ecosystem.
And that machine fuels the enhanced drip reward system. Let's get into this. Treats dripping from a Marmot faucet is the cute description.
Yeah, it's all about incentivizing holding and commitment. It's tiered, it's complex, and it heavily rewards stacking both tokens and NFTs.
Okay, start with just holding the Squeak holder tiers. How does that work?
Simple concept. The more Squeak tokens you hold, the higher you climb up a predefined roll ladder in their Discord or community platform.
Right. Get a fancy role name.
Yes, but crucially, the drip rewards you receive, the passive income, it increases exponentially with each tier you reach.
Exponentially again. Okay, so not just a little bit more, but significantly more at higher tiers. That really incentivizes accumulating the token.
Definitely. It gives the token clear utility beyond just hoping the price goes up.
And then the NFT holder tiers. Similar idea.
Similar, but arguably more powerful. There's a separate ladder system based purely on how many Squeaky Squeaker NFTs you hold. Climbing that ladder also increases your drip rewards exponentially.
So you get drips for holding tokens and separate exponential drips for holding NFTs.
Correct. But the NFT side has an extra layer. If your NFTs have specific traits or combinations of traits.
Rarity matters.
It seems so. Holders of NFTs with certain traits can qualify to drip rewards paid out in other Cardano native tokens.
Wait, not Squeak. Other projects' tokens.
Yes. Tokens like, well, potentially other meme coins or utility tokens on Cardano. These are bought by the Squeak investment fund using its profits.
So Squeak becomes a buyer of other Cardano tokens.
Exactly, supporting the wider ecosystem. And this distribution is handled using another Cardano project called FarmBot. It's all integrated.
Okay, that's cool. Squeak helps Cardano by creating buy pressure for other tokens. And for the real superfans, the ones holding lots of both.
That's where the stacking multipliers come in. If you reach the top tiers on both the Squeak holding ladder and the NFT holding ladder, you get these extra multipliers.
So your rewards from tokens and NFTs get boosted even further.
Significantly boosted, it stacks up. The system is clearly designed to give the biggest rewards to those most deeply invested in both sides of the Squeak ecosystem, the currency and the premium assets.
It's a complex web of incentives, all driving towards holding and accumulating.
Okay, but it's not just about passively holding, is it? They also incentivize actually doing things through community engagement and incentives. The Discord is the heart of the village, they say.
Yeah, they want activity, and they've gamified it. In their Discord, users chat, join events, and they earn points or credits for this using a special bot called the Promofacies bot. Promofacies. Okay, what do these credits do?
They're actually valuable within the ecosystem. You climb leaderboards with them, which gives status, but you can also apparently use these credits to buy NFTs in a community shop.
Oh, interesting. So just being active, chatting, participating, that can directly translate into acquiring assets without spending money.
That's the mechanism. It rewards non-financial contributions, the social buzz, the engagement that helps grow the project with tangible value. It's a smart way to incentivize the community building aspect.
Definitely. And they also encourage participation in the wider Cardano world with governance support rewards.
Yes, this is about being a good Cardano citizen. Users get rewarded with Squeak for doing things like voting in Project Catalyst, Cardano's funding system, or participating in governance votes, or even just filling out relevant surveys.
How do they track that?
Users have to take a screenshot confirming they did the action, submit it via a support ticket, and then they get a share of a pot of Squeak distributed for that activity.
So it encourages people to actually engage with the underlying blockchain's processes.
Yeah.
That's good for Cardano overall, presumably.
It aligns the Squeak community's incentives with the health and activity of the whole Cardano ecosystem.
And what about these volume parties? Sounds fun.
Yeah, it's a more direct economic incentive. They organize events, sometimes teaming up with other Cardano NFT communities. They mentioned Any Vikings as an example partner.
Okay. And the goal?
Purely to generate a burst of trading volume for Squeak.
Right.
So remember the 3% fee.
Right. It feeds the machine.
Exactly. So during these volume parties, they track the trading fee revenue generated, and they actually share a portion of that fee revenue with the partner community that helped generate the volume.
Oh, that's clever. It builds partnerships, creates buzz, generates liquidity, and feeds the Squeak Buyback Fund and Web2 Fund. Win, win, win.
Seems like it. It turns trading into a collaborative, community-focused event.
Okay, finally, within this reward section, we need to properly cover the golden Squeak tickets. We mentioned them earlier regarding the fee share. There are only 500 total.
Yes, 500 total. And they're distributed through dripping rewards on their server based on how much Squeak or NFTs people are already holding. So it rewards existing committed members.
And what's the big deal about holding one? What do they do?
Two main things. First, holding a golden ticket gave you the absolute cheapest mint for the main Squeaky Squeakers NFT collection, like a pre-sale discount for the most engaged.
Okay, early access, cheaper price. Makes sense.
But maybe more importantly for the long term, those 500 ticket holders get that exclusive 0.5% share of the Squeak trading fee. Remember, that's specifically from the buy volume.
Right, so just by holding one of these 500 tickets, you get a continuous stream of passive income that's directly tied to how much people are buying Squeak.
Exactly. It aligns those holders directly with the token's trading activity and success. The more volume, the more they earn. It's a powerful incentive for early and significant supporters.
Okay, let's pull back and look at the big picture again. This whole intricate engine, the fun, the fees, the rewards, it's all driving towards one main goal, isn't it? The Web2 brand expansion.
That seems to be the ultimate destination. The founder explicitly stated the long-term plan is for Squeak to become a 100% sure Web2 brand.
So eventually, the crypto stuff is just the foundation for a traditional brand.
That appears to be the vision, and they're not just talking about it. We know they're actively developing physical products. Plushies are already out, stickers, t-shirts, even children's books were mentioned.
Children's books. Okay, that really leans into the Kawaii cuteness angle.
It does, and they've apparently sorted out the manufacturing side, too. Sources mention connections to a factory in China and also a local merchandise place in Denmark where the co-founder lives.
So that 1% fee going to Web2 development isn't just sitting in a wallet. It's actively funding product creation and logistics.
It seems so. They're building the supply chain alongside the crypto ecosystem.
And the ambition is global, right? Particularly targeting markets where that Kawaii style resonates.
Yeah, they specifically mention potentially launching products in the Japanese market down the line, which makes perfect sense given the Hello Kitty inspiration.
So it creates this really interesting potential feedback loop. Web3 investment funds the Web2 product development. If those Web2 products sell well,
That revenue presumably flows back into the project treasury, strengthening the investment fund.
which then drives more Squeak buybacks and rewards, supporting the crypto side.
Exactly. The success of a physical Marmot plushie could directly impact the value proposition for Squeak holders. It's a unique bridge between the two worlds.
It really makes you think about utility in a different way. The utility isn't just in the code, it's potentially in the success of a physical product line. Now, how does all this fit within Cardano? We asked how Squeak helps the Cardano ecosystem. What's the connection?
Well, beyond just building on Cardano, they seem focused on Cardano integration and support. They're not trying to reinvent everything.
Right, they're using existing tools.
Exactly. We mentioned FarmBot for distributing those native token rewards. We mentioned Arbiter for handling the Forex trading part of their fund. They're plugging into established Cardano infrastructure.
So they're customers of other Cardano projects, essentially.
Yes, and they're also contributing by doing native token farming. And as we discussed, the investment fund actively buys other Cardano native tokens to distribute as rewards. That creates demand.
And their niche goal, to be the cutest meme on Cardano, that fills a gap they perceive.
That's the idea. Bring this specific Kawaii aesthetic, which they feel is missing, to the Cardano community and build a successful project around it, hopefully strengthening the whole ecosystem by attracting users and utilizing its tools.
Looking ahead, what about future utility plans, specifically after the initial NFT mint? What's next?
The immediate focus post-mint was clear.
Yeah.
Get that fund capitalized. The founders stressed that the majority of the mint funds, after covering essential costs like art and setup, went straight into that community investment fund.
So locking in that value engine right away.
Yes. Tying the project's baseline value directly and transparently to the performance of that professionally managed fund. The community's financial health is linked to the fund's success from day one.
Any other plans mentioned? Expanding the rewards, maybe?
Yeah, there were hints about evolving the reward system over time, specifically plans to distribute the Golden Squeak tickets more widely, perhaps integrating ticket distribution or perks based on NFT rarity.
Ah, so linking those super rewards more closely to the actual traits of the NFTs you hold. Makes sense. Keeps things dynamic.
It suggests they're thinking about refining the incentives as the project matures.
And finally, let's circle back to the community's role. What's the message to holders about how they contribute to price appreciation beyond just holding?
The message is clear. Community actions are vital. Active engagement is the fuel for the engine.
So not just passive holding.
No. The founder emphasized that ongoing activity, being active on social media, engaging in the Discord, creating content, telling people about Squeak, and yes, generating trading volume, all of this is crucial.
Because that activity drives the volume,
Which triggers the phase.
which funds the buybacks and the Web2 brand.
Which drives value back to the holders. It's a continuous loop. And community participation is what keeps it spinning. It's not a bonus. The sources frame it as an essential part of the operation. #tag outro.
Okay, let's try and wrap this up. Bringing it back to the core value proposition for you, the listener, who might be considering getting involved. What is Squeak really offering?
Well, it's definitely not just a simple meme coin play. It's presented as this comprehensive, multi-layered ecosystem.
Right, and it seems designed to tackle some common crypto pain points head on.
Definitely. You've got guaranteed liquidity for the main NFTs via that swapper mechanism. That's a big one.
Yeah, it takes away a lot of risk.
You have multiple ways to earn passive income through the drip rewards, and those rewards scale exponentially if you stack both the Squeak token and the NFTs.
So clear incentives for deep commitment.
And maybe most importantly, there's that professional investment fund, diversified across different asset classes, including USD hedged Forex.
With the sole purpose of stabilizing the token price through buybacks and funding those ongoing rewards, it's a built-in value support system.
It really challenges what you expect from a project, especially one starting with meme coin energy. They're using surprisingly sophisticated financial strategies, institutional level stuff, almost to build stability.
Things like holding profits in USD to hedge against crypto crashes or using high APR stablecoin farming. That's not typical meme coin behavior.
Not at all. And it's all in service of funding this traditional consumer IP brand, the Kawaii Marmot brand. The stability they're aiming for is pretty remarkable for this space.
So here's the final thought we want to leave you with, something to chew on. Squeak is basically using all these Web3 tools, decentralized finance mechanics like trading fees, NFT-funded treasuries, tokenized rewards. But the explicit goal is to build a completely traditional physical Web2 cuteness brand. Plushies, kids' books, the works.
Yeah, the whole operation is really a test case, isn't it?
Exactly. It's testing a fascinating model. Can a highly structured, professionally managed crypto financial engine actually be the best way, the most efficient way to fund, launch, and scale a successful, global, real-world intellectual property? Forget venture capital. Maybe the future branding is funded by tokenomics.
It's a really provocative question. If Squeak succeeds in building both a stable crypto ecosystem and a popular Web2 brand using this model, the implications could be huge for how brands are built in the future.
We think we've covered all the critical details from the world of Squeak based on our sources. You should now have a solid understanding of the mechanics, the grand vision, and that layered value proposition. Thanks for diving deep with us again.